Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London, and these are the top stories that set your agenda. Stocks in Asia slide following a sluggish US session. The dollar rallies and the yen drops. Minneapolis Fed President Neil Kashkari says rates will likely be on hold for an extended period. The Israeli military edges further into Rafah. Biden pauses a shipment of bombs to Israel on fears the IDF could deploy them in the densely populated city. Plus, Xi Jinping welcomed with open arms in Serbia, the Chinese president looking to bolster support in Eastern Europe. From the geopolitics to the earnings story then, and the lines crossing from the brewer AB InBev, coming through with a beat in the first quarter in terms of organic earnings, up 5.4%, an increase of 5.4% versus the estimates of 2.75%. So at least in terms of organic adjusted EBITDA, a solid beat in the first quarter for AB InBev, of course, the brewer of Budweiser and Bud Light. In terms of the margin story, also a beat in the first quarter for AB InBev, with adjusted margins coming in at 34.3%, slightly above the estimates. And in terms of volume growth, we know this is important for analysts as well, as we look across the markets of Europe, US and China for this brewer, contracting 0.6%. So volume growth contracting 0.6% in the first quarter, but well above the estimate. So less of a contraction than the estimates had expected. The expectation had been that volume growth would contract by 1.3%, but what you're seeing actually is a contraction of just a little over 0.5%. So in terms of the contraction volume growth, a less dire picture, it seems, at least in the first quarter. In terms of the full year view coming through from AB InBev, they still see full year organic adjusted earnings at between 4 to 8% growth. The redhead coming through, it's a beat in terms of organic earnings EBITDA for AB InBev in the first quarter. Siemens Energy, another story that we focus in, a very different sector, of course, with a focus on Gamesa, but also the wind turbine demand outlook, particularly across Europe. We know that cost input is a challenge as well, more broadly for the sector. Full year, Siemens Energy seeing full year comparative sales increasing 10 to 12%. They are upgrading their forecast then for the full year. They had seen growth of between 3 to 7%. They are upgrading that full year view in terms of comparable sales to an increase of 10 to 12%. Investors will likely applaud that. This stock is already up about 67% year to date. Second quarter revenue coming in line with the estimates at 8.28 billion euros, bang in line with the estimates in the second quarter. The profit margin contracting 1% to 1%, from minus 1% to 1%. So that profit margin seems to be improving as well. In terms of the order book for the second quarter for Siemens Energy, coming in at 9.5 billion. The estimates had been for 10.6 billion. So orders slightly softer. But again, in terms of the full year, there's a raise in terms of the outlook coming through from Siemens Energy. We are going to be speaking to the CEO of that company, Christian Bruch, at 6:15 a.m. UK time. So stay tuned for that. Let's check in on these markets then. You had a fourth straight day of gains across the S&P yesterday, but it was a broadly soggy session. You broke about 5,200. But ended slightly below that. But again, you still posted a gain of about 0.1% for the S&P, 4 straight days of gains for US stocks. But it seems like this is a market looking for additional catalysts. And you see the read across to Asia, the downside coming through, stronger dollar, focusing on the Treasury yields as well. The auction coming through yesterday, well absorbed by these markets. European stocks, meanwhile, looking to losses of about 0.1%. The earnings story continues to filter through, as we've been seeing. We'll see how that changes as we lead up to the open at 8 a.m. UK time. FTSE 100 looking to gains of a little under 0.2%. FTSE futures looking to break back above that 5,200 level, currently flat. Nasdaq futures pointing down by around 0.1%. Let's flip the board cross-asset, briefly check in on the US dollar. We'll do a deep dive on the Japanese yen in a minute or so with Avril Hong in Singapore. The Bloomberg dollar index currently up 0.2%, so a challenge once again in terms of the EM FX space. Strength through the US dollar at 483 on the 2-year. Brent, $82 a barrel. Look at that, down 0.6%, 0.5%. We can keep an eye, of course, on the stockpile build-out in the US and the geopolitics. $82 a barrel on Brent. Gold at 2,318, just a little pop there of 0.2% for the yellow metal. Let's cross over to Avril Hong then, standing by with an earnings story, but also the Japanese yen. Standing by in Asia for us in Singapore. Avril, what are you looking at this morning?
We're looking at just what you just outlined there as we see that Asia's stock winning streak of 4 sessions being snapped. Tracking the Wall Street performance, the declines today being led by the Nikkei as it slumped about 1.7% at one point. And this was no thanks to the declines in tech stocks, but also as the focus shifted towards the earnings as we had the automaking giant Toyota reporting, and that automaking stock, the sector there were declining. We've just gotten the numbers and it shows that miss on the outlook for the full year. And this is, I think, no thanks to the production cuts related to the safety scandal. The stock slumped as much as 4% after the earnings drop, pairing some of those declines now. But I wanted to highlight something else in that the cheap yen's impact on these automakers, flip the board if you can, is being unwound in a way. If you take a look at the performance this quarter, this automaking index in Japan has actually declined about 4% despite the yen weakening about 2%. And this relationship seems to have broken down. This will be key to watch as we work through the Toyota numbers along with Nissan and Honda, which also report this week. Let's flip the board again, because as we track those Japanese currency moves, the things we've been watching out for was the commentary, stern words coming through from the Japanese finance minister, but also the BOJ governor. It seems like verbal pushback, and this is coming on the day after we heard how Ueda and Kishida were said to have met, and that signals to some in the markets that we're going to see greater policy coordination, and to some, such as SMBC Nikko, this could come in the form of the signals of a reduction of bond purchases come June. That is when the BOJ next meet. So that is not really helping the yen, as you can see today. The focus really shifting to the yield differentials, but also, given the weakness today, really highlighting the urgency for Japan officials to act if they don't want to waste the effort from last week when we're likely to have seen those 2 rounds of intervention, Tom.
OK, Avril Hong, thank you very much. Standing by in Singapore. Really fascinating to see how that story around the Japanese yen, the softer yen, how that is not now benefiting the automakers on a really big day in terms of the earnings story with Toyota, of course, the world's largest automaker, coming out with those results. Avril in Singapore, thank you. Now, to the geopolitics and, of course, a focus on what's happening in the Middle East. The US pausing a shipment of bombs then to Israel last week over concerns about plans for a full-scale assault on Rafah. Meanwhile, Israeli forces are edging closer into that city, with truce talks stalling. But Washington says Israel and Hamas should be able to resolve their differences over a proposed ceasefire. For more on this, I'm joined by Bloomberg's Dana Kraish in Dubai. Dana, what is the impact then of this decision to pause shipments? This is something that many on the left in the US have called for. It seems like this is the first time the Biden administration has taken this step. The consequences of this move, and can we expect more?
Good morning. Yes, this is very much symbolic, and this is the part of the U.S. decision is a last resort. The U.S. is now using some of its leverage over Israel to try to convince it not to go ahead with a full-scale invasion of Rafah. Now, that hasn't started yet, but Israel asking civilians to move out of certain areas and taking over a very vital border crossing from the Gaza side, which is the Rafah border crossing, is sparking worries that Israel is still very much adamant on going ahead with a full-scale offensive on Rafah. Now, it remains to be seen whether that would convince Israel not to go ahead with it, and to see what would be Netanyahu, Prime Minister Netanyahu's balancing act here. I doubt it would impact the long-standing relationship between the U.S. and Israel. We saw President Biden yesterday saying that the U.S. support for Israel is still very much ironclad. But this is also, actually very symbolic, and it remains to be seen whether it would convince Israel to go ahead with it. And even if we see more and more with that, I think it's still very much symbolic, and it won't impact that relationship.
OK, largely symbolic, but levers are being pulled on all sides, it seems, as these ceasefire talks, if they haven't completely stalled, continue at least in the background to some extent. Where are we? Give us an update on where those ceasefire talks are then, Dana.
Yes, so a delegation from Israel and another from Hamas have arrived in Qatar, or will arrive today. Arrive in Cairo and will arrive today. Qatar already dispatched its own delegation, and the U.S. is there as well. We saw President Biden, the U.S. saying yesterday that these differences can still be resolved. We can still amend the ceasefire draft proposal to reach some kind of a deal eventually. And despite the fact that Israel completely rejected Hamas's offer, which is a permanent ceasefire, and the surprise acceptance of Hamas, there still seemed to be some hope that the two can reach an agreement. And this is, of course, vis-a-vis the Rafah offensive, which Hamas has said, if you go ahead with this, then we will completely withdraw from ceasefire talks.
Dana Kraish in Dubai with the latest out of the Middle East. Thank you very much indeed. Here's what else you need to be thinking about. That is a story we'll continue to monitor for you, of course, and it continues to evolve at a pretty rapid pace. Else and other topics on the agenda for you. 8:30 a.m. UK, a very different topic. When it comes to central banks, the Riksbank rate decision. And this is very suspenseful, at least according to the reporting from Bloomberg. They can either cut borrowing costs, they could go there, or they could avoid that because of concerns about the weakness on the krona. A quarter-point reduction would move rates to 3.75%. So it seems to be a decision in the balance. That comes through 8:30 a.m. UK time. We will break that for you live, of course, and keep an eye on the moves around the krona. 6 p.m. meanwhile, UK time, US 10-year note auction coming through after the auction yesterday was pretty well received by these markets, but it's another massive week in terms of issuance from the US Treasury and whether or not the market can continue to absorb this. So far, it's been able to do that. The 10-year then, later today, we'll see how that impacts the Treasury curve, of course, as well. On the earnings front, in the US, the focus switching to ARM, the UK company, of course, with a listing in the US, and whether or not that AI generator continues to come through for this maker and designer of chips. That's going to be a really important story. And Uber, they come out with earnings as well later in the US. Coming up, still on the earnings story, earnings beat at least for Disney, but shares in the world's biggest entertainment company slumping. We'll unpack why that was after the break. Stay with us. This is Bloomberg.
The challenge for everyone and the opportunity is how do you have a notion of what's objective and real in a world where there's going to be a lot of synthetic content. I think it's part of what will define search in the next decade ahead, right? People often come to Google right away to see whether something they saw somewhere else actually happened. It's a common pattern we see. We are making progress, but it's going to be an ongoing journey.
And that was, of course, Sundar Pichai, the Google and Alphabet CEO, speaking exclusively to Bloomberg's Emily Chang. You can watch the full interview on the circuit with Emily Chang tonight, 11 p.m. UK time on Bloomberg Television, or stream it at Bloomberg Originals. Now, Disney shares tumbled the most in 18 months. In 18 months after it reported a tepid outlook for growth in streaming subscribers in the current quarter. But CFO Hugh Johnston says price hikes are not impacting streaming negatively.
We took prices up a little bit in the beginning of this year and didn't really see much of an impact. So as to what the future brings, we're obviously very judicious with the way that we price. We want to provide access to as many guests as we possibly can. But we do believe that the great experiences we provide, people are willing to pay for.
OK, Disney CFO speaking to Bloomberg there. Let's bring in Charlie Wells now from the team here at Bloomberg. Charlie, the results coming through, top line for the quarter, it was a beat, but the shares were hammered. What was the investor reaction? Where's the fear situated for investors in this stock?
Yeah, Tom, what I would say is yesterday was sort of trouble, not in the House of Mouse, but around it, because actually it was a pretty solid second quarter earnings report for this company. And I think one thing really to focus on here was Disney Plus, which is that all-important streaming platform for them. That was profitable for the first time ever. So streaming had some other challenges around it and some other units, but Disney Plus, that was profitable. But what investors really seem to be homing in on in the negative sense around that House of Mouse was the potential for sort of softer growth in streaming in the current quarter, as well as subdued growth and subdued visitors to its very important theme parks.
Yeah, the theme park component seeming to normalise is the way they characterised it. Talk to us about what the reason that we're interested in Disney, apart from the components of the business. which have that interest anyway, is the broader gauge on the US consumer. We need to know how the US consumer is holding up. Do we have a broader read across in terms of the health of the US consumer that has the touch points across the Disney empire?
Yeah, you get a sense of how they're spending on discretionary. And interestingly, their CFO was speaking yesterday and said that they did have pricing power and that they did raise prices a bit, but, they were seeing, stability there. But I think what was really important here was his comments on travel. And he talked about a sort of normalization to travel and sort of seeing the end of that kind of post-COVID revenge travel, which really boosted these parks. And these parks, we forget, are crucial to this business. In 2023, they were 70% of operating income. So when they see a downtick there, that's going to have a serious impact.
OK, Charlie Wells on the House of Mouse and the read across to the US economy. Thank you very much indeed on those Disney earnings. There's plenty more coming up. We're going to be speaking to the CEO of Siemens Energy. Stay with us for that conversation. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Siemens Energy is making headway on decisions to fix its troubled wind turbine business. The German manufacturer will cut back output and jobs in its Gamesa unit to return the division to profit after 4 years of losses. It comes as the company boosted its comparable sales forecast for the full year. Very pleased to say I'm joined now by Christian Bruch, the CEO of Siemens Energy. Sir, thank you for your time this morning. So you're upgrading your outlook for the year. What is behind that relative increase in optimism from you and the team?
Yeah, good morning. Thanks very much for having me. First of all, we have a very, very solid Q2 after a good start into the year. We see a strong order momentum from, I have to say, across the board, really, of energy. Particular grid is obviously growing very fast. You've seen also our uplift there, particular with the revenue growth. Order book stands half year around 25 billion. We have 11 quarters in a row with an book-to-bill, so order intake compared to revenue above 1. And that is obviously giving us the positive momentum. It improves the cash flow, which is important. We also not only uplift the revenue guidance, but we also indicated that we will have a positive cash flow generation of around 1 billion this year. And that is something which is really backed by a very strong energy market.
And how do you see that story evolving then in the quarters ahead in terms of the demand, in terms of the outlook for the business, the order intake that may be coming through from your customers? How does that story evolve in the quarters ahead?
I think we are in a long investment cycle in energy. We have to recognize that particularly the grid has been underinvested for decades. And you see this now coming in. You see the need for it. If you turn to a more electrical world, the grid is in the center. So we see this really on a trajectory. The same thing is really also we see on the gas side a much bigger push than we originally expected. That is driven not only by the point around energy transition, that is also driven by the point of electricity demand, where you talk about data centers, all of a sudden really regions trying to build out the electricity infrastructure. So we see, let's say, a good momentum also going forward. What we have to decide is what is the right speed in growing. We're going to remain selective. We're going to obviously want to drive it also with an improvement in the profitability. This is what we're looking at. We are also extending capacity. You may have seen that we launched over the last couple of months 2 new factory extensions for the grid business, one in India, one in the US. So we do it step after step. But in generally, I would say the energy market still shows a very strong momentum going forward. And it is a longer investment cycle, which we are expecting.
Can you give us an update then, Christian, on the plans and the project, the timeframe around fixing some of the turbines that have had these issues? What is the plan? How many turbines need to be fixed? And when do you see that program coming to a close?
Yeah, I mean, as we said, it's a long term really to get working through the whole program. Over the last, I would say, 12 months, Jochen and his team have done a tremendous job of really investigating the different elements, now getting into an implementation plan, which means really getting up to the turbines and fixing things. This will be a multi-year program. This is how you have to imagine it. We're going to work it off jointly in coordination with customers. It will take time. At the same time, we also decided now about the long-term strategic plan. Where are we going to take the wind business to get back to a double-digit margin, what we expect also from that business. And that is obviously underlining we're going to stay in onshore, much more focused, focusing on certain products, certain regions. We drive offshore from our market leadership position. So we are on this trajectory of working through the matters from the past, but also now looking forward, going into the market and step after step improving. But also the things will take time. And this is what we said before, step after step. But it's also now the time to say, hey, that's what we're going to do going forward. We will continue to have a significant team working on the quality matters, really to make sure that we can fulfill the expectations of our customers.
Okay. Change at the top of Gamesa is a troubled unit, and that's been well documented, and you're trying to get your hands around that and get to grips with that. The CEO then stepping down after 2 years. It's the fourth CEO at Gamesa since, 2017? You say there needs to be generational change at that unit. That's how you described it. Why?
No, I think I wouldn't call it step it down. It's a really transition which we had to do at one point in time, seeing obviously, I would say, call it life planning of individuals. And we are now ahead of, let's say, really long-term plan journey, which will take us 4 or 5 years. And we knew we have to do it sometimes. And we discussed on how to best do it. Jochen initiated the programs. He will be around, right? He's not stepping down immediately. He will launch also all the new changes. I'm fully behind that, what all he has done. But we also knew that we don't want to do a leadership change 2 years down the road when we are in the middle really of really all the changes coming to fruition, because we are now setting the key basics for the next 3, 4, 5 years. And we also want to give the clear communication to the market, but also to our employees and saying, hey, that is a structure in which we're going to stay and work through the matters. So we are simply in this transition phase, and this is where we had to decide at one point in time, hey, how do we do it best? And we believed this summer would be a good time to do that. Both of the individuals have worked closely together,
Christian.
So I feel comfortable with that.
Yeah. Christian, the Chinese presence in Europe this week, how much time do you spend fretting about your customers switching up to cheaper Chinese turbines? Is that a concern? Are you seeing any transition to that? How big is the threat from those cheaper Chinese turbines?
First of all, I think it's always good to have great respect for your Chinese competitors and look exactly what they're doing. At the same time, I think it's like in other areas what we're doing. You always have Chinese competition. You cannot avoid it. And you have to have focus and selectivity. Choose the right markets, have a clear focus on your core products, what you're driving. And if we are talking to our customers, they're very well distinguished in terms of what they get from whom and what they want. So I think it's possible to compete, but we will also not defend each and every market, particularly on onshore, where we do not see the midterm profit pool. So at the end, it's about focus and selectivity. It will not be an easy competition, as it is not also in other areas, I clearly have to say. I mean, and we see the other areas doing good. Also, there is Chinese competition. But obviously, yes, we have to look on markets which bring the regulatory framework to really allow mid- and long-term profit pools for a supplier like us.
OK, Christian Bruch, the CEO of Siemens Energy, thank you very much on joining us on the upgrade in terms of the outlook for that company, getting to grips, it seems, with some of the troubled units around Gamesa, but seeing a brighter picture in terms of the demand outlook in the quarters ahead for that business as they reconcentrate on the European market and rationalise some of that business. Sir, thank you very much indeed for your time. Coming up, BMW set to report first quarter earnings as the German automaker is expected to reiterate its full-year guidance. Of course, the markets in Europe, the US, China, really consequential. And what is the cost component? And can margins be held at that double-digit level for this company? We'll bring you the details next. Those numbers dropping in a couple of minutes. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Stocks in Asia slide following a sluggish US session. The dollar rallies and the yen drops. Minneapolis Fed President Neil Kashkari says rates will likely be on hold for an extended period. The Israeli military edges further into Rafah, Biden pauses a shipment of bombs to Israel on fears the IDF could deploy them in the densely populated city. Plus, the European earnings season rolls on with a beat for brewing giant AB InBev. We're going to bring you 9 numbers from BMW now and Continental. BMW coming through with a miss on the margin in the first quarter. BMW's margins coming in at 8.8% in the first quarter, below the estimates of a little over 9% on the sales component for BMW. That was also a modest miss as well in the first quarter. 36 billion versus the estimates of 36.8 billion. 36.6 billion versus the estimates of 36.8 billion. So modestly below the estimates. Not a huge miss, but a little bit below in terms of the sales story. The margin also a little softer for BMW. First quarter EBIT earnings coming through at just over 4 billion, 4.05 billion euros. The estimates had been for 3.96 billion. We continue to watch for lines, of course, on the crucial Chinese market as well as demand in the US as well. But the top line is it is a miss coming through on the margins and the sales and the earnings in the first quarter. They still see full year auto margins of between 8 to 10%. So at the top end, 10%, at the bottom end, 8%. The estimates had been for 9%. So you're roughly in that range. They continue to hold that full year view on margins. We also had the earnings coming through from the world's biggest automaker as well, Toyota. We'll get the details on that for you and that breakdown from Avril Hong, who's standing by in Singapore. Other earnings we're expecting to get as well, Continental, and we're going to be speaking to one of their executives in the next hour or so as well around the story there, because, of course, they are a key supplier of components, not just tyres, but all sorts of other kit to, of course, this auto industry. An auto industry that's facing its challenges in terms of the slowdown in demand and growth within EVs and, of course, the cost-cutting as well. Incredibly competitive environment right now. Tesla and others aggressively, of course, cutting costs. Continental, by the way, the line's dropping right now, staying full-year sales at about 41 billion to 44 billion euros. That's a full-year view on sales from Continental, about 41 to 44 billion euros. They still see their full-year adjusted earnings margin of 6 to 7%. So they're looking at a margin of 6 to 7% for the full year. That's Continental. So the autos market is in focus for us right now. That's the supplier, of course, of tyres and other components, and then BMW with the miss. Let's go, though, to the world's largest automaker. It is Toyota. The yen story is part of this mix as well. Avril Hong standing by in Singapore with the details. Avril, run us through the earnings then from Toyota that dropped, 30 minutes ago or so?
Yeah, Tom, I mean, if you are a Toyota investor, you would have experienced quite a choppy ride. Take a look at the way the share prices have evolved in the past 20, 30 minutes or so. Now, when the numbers first dropped, it was that second year of record profit, something to cheer about. But I think what investors first focused on, and which led to about 4% decline in the stock, was that the full year operating income outlook was a miss versus estimates. It sees it declining about 19% to 4.3 trillion yen versus the market estimates of about 5.3 trillion yen. We already knew profit outlook would be affected from production cuts, no thanks to the safety scandals that were revealed from Daihatsu in December last year and then in January from Toyota Industries. So we knew that this would affect the production side of things and the outlook, but I think the markets didn't expect it to be this bad. So that was the initial reaction. But we also have investors potentially focusing on the positives here. Among them, how we saw strong sales for the hybrid side of things for Toyota. Of course, it's seen the hybrid demand really coming up. It's that resurgence thanks to what we're seeing on dwindling demand for EVs as consumers maybe balk at these higher prices for electric vehicles, as well as some of those concerns relating battery issues. Toyota has really benefited from the resurgence in demand for hybrids. So that's what we're seeing potentially investors reacting to. We also see it expecting for the sales of Toyota and Lexus in China to hum along quite nicely. But the other thing that we wanted to focus on, I think if we can flip the board and take a look at the close relation between the cheap yen as well as what that is meaning for these automaking related stocks, that relationship has really broken down. In the quarter, we've seen how these automaking stocks in Japan have actually slumped about 4% versus a cheap yen that's declined about 2%. And this really speaks to how investors are potentially here just bracing for a potential snapback in the Japanese currency. So that is what we're going to keep an eye on, not just from these Toyota earnings, but also Nissan and Honda when they drop their results later in the week, Tom.
OK, Avril Hong, really excellent breakdown of the Toyota story and the linkages to the Japanese yen and the broader auto sector in that part of the world as well. Avril, thank you very much indeed. Back to the earnings story then in Europe, where Alstom was coming through, and this is the top line, the redhead for this company. The stock down, by the way, 33% in the last 12 months. The redhead, they plan to increase capital. A capital increase coming through from Alstom. That is the plan, €1 billion capital increase plan as part of their deleveraging efforts. So this stock is going to move at the session at 8 a.m. UK time. In terms of the full year sales, so they're announcing this in line with and at the same time as their earnings. Full year sales, by the way, coming in marginally above the estimates, €17.6 billion, just slightly above the estimates of 17.3 billion. They're not going to be paying a dividend for the fiscal year 2023 to 2024. So no dividend being paid by Alstom, the French company, of course, the maker behind trains and train engines, of course. EBITDA margins coming in slightly above the estimates, just a hair above the estimates. 6.5% is the margin that they're looking at for 2025. The estimates have been for 6.48%, so just slightly more comfortable margin. But again, the really important component of this is that they plan this capital raise of about €1 billion as they wrestle with this €2 billion deleveraging plan. We will keep across this story for you. The earnings story, of course, tying in to what's happening across these markets. Let's check in right now on European futures. The context is you cast your eye back to Wall Street yesterday, closing up higher again, just by a smidge, up 0.1% for the S&P, notching 4 straight days of gains. But it's a broadly soggy session, as we've described. Looking for catalysts, it seems, these markets. Whether or not the earnings story will continue the momentum is something we'll be watching today. European futures, then, pointing lower by 0.2%. FTSE 100 looking to add 0.2%, so a slightly different pitch of the FTSE 100, which has started to perform quite well in recent weeks. 8,345 for the main UK index. S&P futures pointing flat, but above that 5,200 level. You did get there yesterday, but then moved slightly below that by the end of the session. 18,188 on the NASDAQ. We'll see ARM's earnings and Uber as well. So that will tie into the earnings story in the US. NASDAQ futures kind of pointing lower by 0.1%. Cross asset, let's flip the board and drill down into what's happening across, of course, the commodity space, oil and the dollar. The Bloomberg Dollar Index up 0.2%, so strength for the US dollar in the session today. 483 on the 2-year, an auction yesterday, what, 60-70 billion US dollars, well absorbed by the markets. Brent, $82 a barrel, below $83, down 0.5% in the session today, so further softness within the oil story. Gold at 2,319 for the yellow metal, up 0.2%. Let's get the latest then in terms of Xi Jinping's continued tour around Europe. Chinese President Xi Jinping then arriving in Serbia on the second leg of his European tour as he seeks to tighten Beijing's bond with the Balkan nation, which has embraced Chinese investment. He'll then travel to Hungary, where Prime Minister Viktor Orban stands nearly alone among EU leaders in drawing closer to China. For the details then, let's bring in from Warsaw, Bloomberg's Piotr Skolimowski. Piotr, why did Xi then choose Serbia as part of his visit to Europe? The history runs through this relationship.
Hi, Tom. Indeed. So it's the part of the trip that obviously won't invite any uncomfortable questions for Xi. Obviously, when he was in France, he had to answer questions about Ukraine, about the subsidized, or what EU calls overcapacities in Chinese supplies. Now, when it comes to Serbia, obviously, this part of the visit will be rich in theatrics and history. It comes on the 25th anniversary of the U.S. bombing of the Chinese embassy in Belgrade, which killed 3 Chinese journalists. That was in 1999. And the story of that bombing, it continues to reverberate, and it's still very much there as part of what Xi Jinping actually said in his op-ed for one of the Serbian newspapers, he called it, this is the friendship that was forged in blood. And he called this bombing flagrant, and he also said it will be remembered. So obviously there's a lot of history that ties both countries, but there is more to this, obviously. I mean, there are business ties. The fact is that Serbia and its president, its leader, Aleksandar Vučić, has been very much playing this balancing act between China, where he's trying to draw in more investment, and obviously the EU, where Serbia wants to be a member of, but at the same time, obviously, there are conditions attached, which is it has to recognize Kosovo, which Serbia won't do. So a lot of history there, but obviously there are some business ties there which are very important for both Serbia and China.
So Piotr, on the business ties then, what are the key takeaways, or at least goals that Xi Jinping will be hoping to kind of lock down on this visit? Anything concrete on the business and trade front?
Right. So at this point, what we know is that China is Serbia's biggest source of FDIs, and also the second biggest trading partner after the EU. If we combine it with Hungary, it's 15 billion in dollars of investment. One of the key examples of those ties is a rail link that now is being modernized, being built between Belgrade and Budapest. Some of it is already completed, and it's all Chinese money. It's built by China. So you kind of see it's if you're looking for a symbol of investments in this part of the world by China, that's something that you got to see. There's also a Chinese investment in that sort of transformed a copper miner in Serbia. This company, that used to be a place where you had acid rains. Right now, it's a decent company, copper miner, where China has invested heavily. So what we're hearing from about this trip in terms of investments, there's going to be the two leaders are going to sign about 20 MOUs. So there are going to be 20 agreements. We don't know the details yet. Obviously, we'll find out more today. Some of it that will have to do with business. Some of it is with deepening cultural ties. But clearly, Xi Jinping is here to do business. There are historical ties that bind both countries. And obviously, it's a bit of a headache for the EU in the sense that EU wants to project unity. It wants to stand stand together against Chinese oversupplies, against Chinese subsidies, subsidized exports.
Piotr.
And Serbia is obviously the country that wants to be part of the EU. At the same time, it's very much tied to the.
Piotr Skolimowski, thank you very much indeed for the update in terms of Xi's continued visit in Europe, right now in Serbia. Next is Hungary. Thank you, Piotr. Now, TikTok has sued the US government over a new law that will force its Chinese parent, ByteDance, to divest the popular video app or face a ban across the country. The legal challenge sets up what could be a prolonged court battle, pitting free speech rights against national security interests. Former US Treasury Secretary Steve Mnuchin says he's still open to buying TikTok's US operations from ByteDance. Mnuchin believes the app's algorithm could be replicated in the US. He spoke to Bloomberg at the Milken Institute Global Conference in Beverly Hills.
Still very interested in buying it, and to the extent they want to sell it or spin it off, we very much want to pursue that. I support that Congress passed the bill and it's now been signed into law. I will say this has had just incredible, overwhelming support with Republicans and Democrats. This may be the only thing that everybody agrees on. The fact that it's on 160 million phones, I do think it's a security issue.
Does the deal still work if the algorithm doesn't come with TikTok?
Well, the Chinese government has been very clear that they won't give an export license on the algorithm, and I understand that. We have sensitive technology that we don't want to transfer to them, and they don't want to transfer this to the U.S. I've actually spoken to a lot of tech companies on working about rebuilding this. I do believe the algorithms could be rebuilt. So my plan, if we were to purchase it, would be to rebuild the technology under U.S. leadership, make sure that it's all disconnected from ByteDance going forward, and that it is very robust and secure.
Former US Treasury Secretary Steve Mnuchin there speaking to Wall Street Week anchor David Weston. Coming up, May has been kind to emerging market currencies, at least so far. We discuss the outlook with the global head of EM credit strategy at BNP Paribas. That is next. This is Bloomberg. Welcome back. Now, emerging market currencies as trimming gains today after their biggest four-day rally of the year. Traders have been cautiously hiking wages for rate cuts from the Fed this year, fueling demand for riskier assets. For the read across from EMFX into EM credit, let's bring in Trang Nguyen then, global head of EM credit strategy at BNP Paribas, someone who's really in the weeds on this story, follows the flows and how this market is adjusting. Trang, thanks for joining us in the studio. Talk to us about, there's been this rally, start of the year, around EM credit. That rally seems to have faded a bit. What are flows telling us about the appetite for EM credit at this point?
Sure, Tom. So the investment thesis for EM has always been about the strong growth potential. And that strong growth potential necessitates a great deal of investments or financing to really become, to materialize. And we're looking at still a very challenging financing backdrop with, Fed cut expectations being reassessed. In January, we were pricing 7 cuts this year.
Yes.
And now we're looking at just 2. Right, so the financing costs still remain prohibitive for EM. Now, for me, right now, it's actually less about the financing costs because EM countries still have a great deal of access to concessional sources of financing. But the bigger picture here, taking a step back and bringing the discussion back to the flows, is around the competition that we're still facing with money markets. So the inflows have not returned to EM yet. And heading into the year, I think we were a lot more optimistic that they would return. The Fed cuts would lower the bar for the inflows to return, but we're still looking at outflows at the moment, and there's no natural marginal buyer of EM high yield per se.
Okay. So we're still looking at the outflow story. It's so dependent still on the Fed, and we know all the uncertainty around the data. This is a very data-dependent Fed. We don't know if they're going to go with a cut this year. The markets are pricing in 43 basis points, just shy of 2 cuts from the Federal Reserve. If we were to get that, if that scenario comes to pass with all the caveats, what kind of catalytic effect could that be for moving that cash flow out of money markets and into EM credit?
It would be huge. We haven't seen inflows in EM in 3 years now, so the bar is quite low. So any resumption of inflows would be pretty catalytic for EM, especially in the high-yielding space. Right, so right now, if you look at the data and anecdotal evidence, we see crossover participation in EM IG new issues. So that's to say that global bond funds that are getting inflows are buying EM. But they're not buying EM high yield, right? So that means the rallies that we've seen EM high yield is based on fundamentals, which is a narrative that I certainly subscribe to, but we're not seeing the marginal buyer. Okay,
they want that relative safety around investment grade within the EM space. You talk about some rising star candidates, though. When we look at a scenario more constructive, what are those candidates at this point?
So I think this is a trend that is becoming quite pronounced this year. If you look at the upgrades versus the downgrades, that ratio has been the highest it's ever been. So doing a simple count, I've seen over 15 sovereign upgrades this year. Right. So when you look at the past, say, 5 to 10 years, EM has been plagued with a great deal of downgrades. And so we think that trough is now behind us. And it's also plagued by the fact that it's the larger EM economies that have been downgraded as well. So Brazil, South Africa, Russia, Turkey, to name a few. And now a few of them are on the mend, right? Turkey.
Does Turkey fit into that category, on the mend?
Exactly.
Is this a space you want to look at?
Yes. So Turkey just got upgraded to B+ by S&P last Friday. It's on positive outlook by all 3 rating agencies. So a graduation, if you will, from single B and migration into double B is a big deal because we know that a lot of EM investors are restricted by single B or triple C ratings. So that would catalyze a great deal of buying as well. And even though we've seen a great deal of positive narrative around Turkey, if you look at the official CBRT data that the central bank releases weekly data on non-resident holdings, the longer-term trend is that non-resident holdings are still at very low levels compared to history.
So this is potentially a turning point for Turkey and flows there, and the way the investors should be thinking about that country. That's really interesting. Briefly on China, have you seen enough in terms of the support coming through for real estate to want to dip your toe back into China credit within real estate?
So China, there's a country where we don't have a sovereign upgrade. With that said, though, I do think there are reasons to be more positive on China. The recent policy statements do reaffirm a commitment to more pro-growth and pro-stimulus measures. Now, is that enough for real estate? Unclear. It still remains to be seen what those measures are and how they get implemented. But we're still on the fence about whether there will be more direct transmission mechanisms into real estate, because we still need to see a recovery in the physical market, which we don't think is imminent.
So we wait for that as the potential catalyst for China. Trang Nguyen, thank you very much indeed. Really smart on the EM credit space, of course, and how that story has evolved in the last few months. Trang Nguyen, Global Head of EM Credit Strategy at BNP Paribas, potentially a turning point for Turkey. Plenty more coming up. Stay with us. This is Bloomberg.
I think the most likely scenario is where we are right now, which is just we stay put for an extended period of time until we get clarity on, is disinflation in fact continuing or has it in fact stalled out? I don't think we know the answer to that, so I would say the most likely scenario is we sit here for an extended period of time.
Minneapolis, Fed President Neil Kashkari speaking at the Milken Institute Global Conference. Not a voter this year in the Fed, but that view on higher for longer. Rates at this level for an extended period of time. By the way, he also didn't rule out a further increase if you don't get back down to that 2%. If inflation gets stuck at 3%, he said we would consider a further increase. That's not his default and base case at this moment. But that further commentary feeding into how we think about where the Fed goes from here. Markets, by the way, now pricing at about 43 basis points of cuts. The first cut not coming through to November is the market pricing. So just shy of 2 cuts being priced in by these markets, not until November. Of course, this has been evolving at a pretty rapid pace over the last few weeks. Let's flip the board and talk about the inflation injection into that view, of course, the stickiness around inflation and the forecasts and the way they diverge. You can see the crocodile mouth shape here because the forecasts are from the Fed in terms of the PCE, and then you have the CPI forecast. The yellow line, the CPI forecast coming through from economists, they expect that to remain at 3.1%. The PCE, the preferred measure of inflation for the Fed, they see that coming down pretty sharply. That divergence, what does that tell you about the disconnect as we see things, for example, like rental costs, a third of that CPI basket expected to increase almost 10% this year. We're going to be speaking, by the way, about another topic, AI, exclusively with the DeepMind CEO, Demis Hassabis. That interview later today. Do not miss it. Coming up next, Markets Today. This is Bloomberg.